Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be looking at Bollinger Band and how you can use it to identify overbought and oversold, and you can apply this into your trading strategy. So, what is Bollinger Band trading strategy? So, this is developed by John Bollinger, and Bollinger Bands are volatility bands which are placed above and below a moving average. So Bollinger Bands consist of three bands: an upper band, a middle, and a lower band. So these are used to spotlight extreme short term prices in a security. So the upper band represents overbought territory, while the lower band can show you when a security is being oversold. So most technicians, that is investors or traders, will use the Bollinger Band in conjunction with other analysis tools to get a better picture of the current state of a market or security. So it's better to use Bollinger Bands along with other technical indicators so that you can confirm your signals properly, as this is specifically based only on volatility. So volatility is based on standard deviation, which changes as the volatility increases and decreases. So as we've already seen, there are three bands. So Bollinger Bands will consist of a center line and two price channels above it and below it. The center line is the exponential moving average, and the price channels are the standard deviations of the stock being studied. That is the line in the above and below. The bands will expand and contract as the price action of an issue becomes volatile or becomes bound into a tight trading pattern, or that is contracts. The band will automatically widen when the volatility increases, and it will narrow down when the volatility decreases. For signals, bands can be used to identify M tops and W bottoms to determine the strength of a trend. So we'll look at this with an example here. So here we have the Nifty 50 index, and here this is a 1 day candlestick chart. So each candlestick we are seeing here represents 1 day, and in this, we have applied the Bollinger Band. So on the top, we have the upper price channel, and here lower, we have the lower price channel, and in the middle, we have the exponential moving average. So as we've already seen, the center line is the exponential moving average, and the two price channel or the bands above and below it are the standard deviations of the stock being studied. So this is the moving average line, and these are the standard deviation of the stock being studied. So this price is here. So as we can see, as this in this area, we have the price band contracting. So here the volatility is very less. So it's very close by here. It's very range bound. So this is showing that the volatility is very less. And here it's widening up and down. So the volatility is very high. As we can see, the candlesticks are also pretty big and ranging. So the volatility Bollinger Bands have expanded here as it has increased the volatility. And here again we have a contraction and the range bound not so volatile market. So the Bollinger Bands have contracted here again and expanding later as the volatility increases. So let's see how you can identify the overbought and oversold and integrate it into your strategy. So when the price of the asset breaks below the lower band of the Bollinger Bands, a trader may enter a long position expecting the price to revert back to the middle band, which shows overbought. So when the asset breaks below the lower band of the Bollinger. So here we have the lower band. So this example here, whenever the Bollinger Band, the candlestick charts touch the lower band, we have buy signals. So here we have 4 buy signals in this small chart example given here. So this is the overbought. Over, yeah, this is a buy signal. And you can, when it touches back to the middle line, the moving average line, that is the overbought territory. So you can sell it there when it touches back into the middle line. So next is the oversold. When should you start selling? So when the price breaks above the upper band, a trader can short the asset betting on a move back to the middle band. So here we have three signals showing the um, price leading to an oversold territory. When the candlestick chart touches the upper band, that is a signal to start selling so that you can start shorting. And when it reaches the middle band again, you can exit the stock. So that is an exit strategy. So let's look at this again. Overbought, you can enter into the stock when the stock candlestick price touches the lower band and exit it when it touches the middle band. And for oversold, when the candlestick chart touches the upper band, you can start shorting on the stock and exit it when it touches the middle band. So let's look at the actual screenshot of a candlestick chart. So here we have again the Nifty 50 index. So here we have the shorting signal here. So let me give you an example with the, okay. Here we have a sell signal. Here you can start shorting in this area. And here we have, you can start buying here and wait for it to touch here. Once it crosses, this is one exit range. So this is slightly small gains, but this is definitely a small gain that you can achieve. Here again, you can see this is one buying signal and you can sell here. Again, buy signal when it's touched the overbought, and here is the sell signal. So let's look at some more. Buy, sell. So but these are 1 day candlestick charts. So this would have included buying it 1 day and selling it on the next day or the day after, because even then it's still on a higher level. So here again we can see some volatility. It's very range bound, but this would be very like quick trades. So that's how you can identify using the Bollinger Bands for buying and selling. So this was a oversold territory. So you could have shorted here in this region. Again, one shorting signal given here. So this is how you can use the Bollinger Bands to generate trading signals. However, most experienced traders will generally suggest that you use another technical indicator in combination with it to confirm your signals. So thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to start trading, you can create your Demat account with Alice Blue by clicking the link in the description and filling out your details. With Alice Blue's brokerage services, you'll get excellent exposures and margin for trading in the stock market.